Hey, good evening, everyone. It is 5:30 p.m. on Friday, January 27th, 2023. Forex Brizio here, and I hope you all had a great week. Just wrapping up here for the week, and hopefully you've caught the last few videos regarding this kind of correlation here between U.S. dollar Forex pairs, at least the majors like Euro dollar, dollar Swiss, and futures, these stock futures, like what you see on the left here, which is the E-mini S&P, but it would be the same thing for the NASDAQ. I just picked one here. So what I wanted to do in this video, guys, is talk about, again, kind of the syncing up of these charts of the price action. I'm going to be concentrating more on the price action than the stochastic in this case. But, I didn't want anybody to kind of get the impression that it's most definitely always going to match up, tick for tick, pip for pip, that when one goes up, the other one goes down right at the same time. Because there are going to be times when they don't sync up. And chances are, even on a daily basis, they're not going to sync up right to the candle. Okay, they might in some cases. But in other cases, there's going to be a lag time where they don't sync up. And then you're going to have to make a decision, because the question is going to be, all right, well, then what do I do in that case? If one's going up, one's going down, what do? Well, you either don't trade, or and you just sit on your hands and wait for them to get into sync, or maybe you just trade the one that you feel you're more confident about, whatever your entry criteria is. You feel like that one's, a better trade risk than getting into, say, both of them. Where if you're wrong on one, you're going to be wrong on the other and, have two losses instead of one, which, of course, is always a risk either way. So, and like I said in the description of one of the last videos, even if you don't trade both assets, using this together can help you give a better picture of where the market sentiment is, say, either for the U.S. dollar if you're trading Forex, or for the stock market if you're trading on the futures side. So again, you don't need to have active trading in both of these asset classes, but you can use them side by side for comparison. But if you are trading them together, the way I do, then you want to make sure that you have as much in your favor as possible before you hit that button. Okay, so I'm just going to show you a few examples here. We'll just go through it. So rather than using my TradingView account, which you can do it either way, this is my MetaTrader 5 account through my futures broker. Now, I can't trade Forex on this broker. They do have Forex pairs that you can analyze, but they're not a registered U.S. broker for Forex, so this is for their foreign clients. But, they've got the charts, so I can at least put them side by side like this. Although, like I said, I don't trade Forex on this account. I trade it on my Oanda Forex account, and I trade futures on this account, which is, again, is a futures broker here in the U.S. Okay? But anyways, that doesn't really matter anyways. So, so what you see on the chart, so this is the E-mini S&P up here, and this is the Euro dollar. You can see we're on the 5-minute chart on both of them. Okay? This white line coming down the chart here is an indicator. It's a session time indicator. So I have it set for 9:30 a.m. Eastern New York time, okay, which is the open of the U.S. futures session for these stock indices, okay, is 9:30 a.m. Eastern time. Now, obviously, the Forex market opens at 8. We're not interested in trading anything on the Forex market prior to 9:30. Or on the futures account. I don't trade anything before 9:30, okay? And like I said, sometimes later, but certainly not before 9:30. But this white line marks off the 5-minute candle. So basically the candle between, 9:30 and 9:35. Okay? So this was on January 20th, happened to be, you can see on this day that these two markets were very much in sync. You can see both of them opened up with a bearish candle. You can see this purple candle through the bar here. That's a bear candle, and you can see it over here. I know it's a little tough to see through this white, but these opened up together, and then you can see both markets went off in the upside and really never looked back the whole day. Now, in this case, you can't really use the stochastic indicator, because if you look down here, the stochastic signal actually came, a good half hour before the open, actually in both markets. Okay, so so in this case, you're just going by pure price action. Okay, so there's an example where they're synced. Now let me go back. I looked up one. I think it's this day, which is the 17th of January. So this was 10 days ago. Let me go back on this one. Find the same spot. Okay, so now this is the opening on January 17th. Okay, and just to show you. Okay, you can look down at the bottom. 14:30. That's 9:30 a.m. on this broker. Okay, and then over here for the euro, again, you can see 14:30. Okay, so just so to show you that I am on the right time. Okay, now look at the difference here. On the euro dollar, we almost immediately started trading down. Okay, it moved sideways for about 15 minutes or so, and then we had this huge bear candle, and the market just basically went down the rest of the day. We had this one little pullback, but essentially it was down the whole day. Okay, whereas on the S&P, we started off going up. Okay, we went up for until an hour into the session. There's 15:25, 15:30. So there's an hour into the session before the S&P caught up with the euro dollar. Okay, so now in this case, you might look at this at the market open and say, well, what do I do here? We obviously have a conflict. In this case, they're not both going up or both going down at the same time. And again, I reinforce the fact, like I told you before, generally speaking, when the U.S. dollar weakens, the euro dollar is going to go up, assuming that the euro itself is either strong or neutral, and the stock market will go up. If the dollar is strong, then generally the stock market is going to go down, which means this, because it's the S&P, it's an index. And the euro dollar will also go down, obviously with a strengthening dollar. Again, assuming that the euro is either neutral or weak on the day. Otherwise, you'll get sideways action. But let's assume that the euro is neutral. Okay, so that's generally what you get. But like I also said, that's not always the case. And in this case, it's not the case, at least for the first hour, where we had the euro dollar almost immediately moving to the downside at the open. A little choppy price action, then boom, it went down. And we actually did have a stochastic signal just after the open right here, and the price went down. It really just kind of went down the rest of the day. Whereas over here on the S&P, we didn't get our sell signal until here. There's the movement on the stochastic. Finally, we got in. So this would have been at 15:30. But if I go over here and look at 15:30 on the euro, 15:30 is way the heck over. It's on this candle right here. So right here, you would have missed more than half of this move down had you waited. Okay, you would have, if you had gotten in. Okay, at the time that you jumped into this trade, by the time this one caught up, and they say, okay, well now I'm going to enter the euro dollar trade. Look how much of this you missed. So I wouldn't have taken that just because I would have been like, it's just gone too far. All right. So these are one of those ones where you either have to decide, I'm just not going to do anything, and I'm going to hope that they sync up at some point, or you're just going to make a decision and trade one or the other. And in this case, I guess you could have done either. Either one would have been a good trade on their own, but together, if you had waited, you certainly wouldn't have taken the S&P short at the time that you took the euro short, because you would have gotten killed, because look how far it continued to go up. I mean, it went up another 178 points before it finally turned. Okay, so you certainly wouldn't have done that. So you would not have traded the S&P short. You could have traded the euro dollar short right out of the gate, pretty much, just using the stochastic. Because and this goes off what I originally said about trading these, is that initial move, that initial hour into the session, if the market's moving strong in one direction, that first hour out of the session, that chances are that's usually manipulation, and the price is probably going to come down, which is what it did right here. But again, the bottom line is we don't have a sync between these two markets. And so you would not have taken this same trade on these two assets at the same time, because you would have gotten killed on the S&P. You would have done okay on Forex, but any money you would have made on this trade, you would have easily given it back on this one, you know, with a loss, assuming that you had a stop loss somewhere in here, you know, you would have gotten killed. You went short here. Let's say you went short right here, put your stop right here. You would have been knocked out because it went up all this way. It maybe not quite equal, but you would have given back a lot of it. So there's no need to do that, right? So the bottom line is, guys, is that you need to look closely at these two things at the open. Maybe not right at that first candle, but within that first, you know, if you're using the 5-minute chart, within that first half hour. So within the first 6 candles, sometimes it'll go an hour, but you want to kind of make a decision. If you see them synced right out of the gate, and you trade both assets, hey, you know, maybe throw some risk on for both of them and see what you get. But if they're out of sync, then you either sit on your hands and do nothing and just say, I'm not going to trade, and that's perfectly fine too, or you just take the one that you think has the better setup, in which case, on this day, most certainly would have been this one. Because even over here, this was going up, but look at the stochastic indicator. It's already in the overbought zone. I would not have taken this long, because I would have looked at this and said, this thing is way overbought. It's probably going to come down at some point, but I don't know where. I'm not taking this long. But this one, we're in overbought, and then we cross down, and we see this big candle down. Now that would have been your opportunity to get in. And even if you waited till the close of this candle and you only took it down to this low, that's 65 pips in, 35 5-minute candles. That's like an hour and 20 minutes or so. You would have picked up that 65 pips. Okay, so I don't know if we can scroll back here and look at any other ones. This is January 16th. This is a really messy Forex day. So we'll just skip that one just for the sake of demonstration. All right, so this was on January 13th, and this one probably you could say is in sync, right? We already had some trending up here on the euro on this day, and you can see at 9:30 we were trending up, but we weren't in overbought, and then we see the futures market immediately cross out of oversold. And so this would have been a good trade. And you can see both of them just went up the whole day. And, you know, we had some pullback right here on this one. We had some pullback here on the futures. And but essentially the trend was up for the day. And, you know, if you want, you could always throw a moving average on these things, or, you know, this you can see when I got over here. I'm not a big move, but this is a 20 period I just put on here. On the futures market, I find some of these shorter moving averages are more well respected than they are in Forex. I think if I put a 20 period on here, you would have well breached it on this move. But anyways, this is just an ugly day. This has got to be a news day, so we'll skip that. Let's look at this one, January 11th, and I'm just picking these. Okay, so here's another one which we're kind of out of sync on, right? We opened up higher here, okay, came down, okay, whereas on here, now it's not totally out of sync. There's just more exaggerated price action here on the euro, but this one's pretty much in sync. Let's look at January 9th. January 9th, I'd say we're synced right at the open. Now the euro had been going up all morning, so I mean most of this move is over, but still there was an opportunity here, you know, at the open on this little crossover right here. Okay, and you know you could have picked up 40 or 45 pips, and on the futures you could have picked up, you know, 36 points to the upside here. So, all right. And then you can see what happened later here is that we turned and went back down. This was only about 2 hours. This was only, well, yeah, about an hour and a half. So we go from 14:30, 2.5 hours later, right here, and we turn down. Okay, and this is what I was saying. Sometimes you will get that second opportunity in the day, usually around, mid-morning, around 10, between like 10 and 11 a.m. Sometimes you'll get that reversal. Okay, and it's just something to watch for the afternoon. Again, you can see the moving average works really well with this. Okay, but we're just talking about at the open, guys, and so on and so forth. So I don't want to beat a dead horse. Okay, so I just wanted to make this because I know, like I said, in the first video, I was kind of talking more about, hey, these things are exactly in tune and synced, and, you just look at one, look at the other one, and just, boom, take a trade. And of course, nothing is ever that simple. And in this case, you can see sometimes they're not going to line up. Now, usually at some point during the day, they are going to eventually line up with each other. But they might not right out of the gate. And if they're not going in the same direction out of the gate, just have a little bit of caution. Practice a little better risk management. And like I said, either just sit on your hands and don't trade it at all, either one, if you're in the market to trade both. Or if you only look at one of them, then you have to make a decision. Is this, if you only trade Forex, but the setup doesn't look great, then don't trade it. If you're only trading futures and the setup looks better, then that's the one you take, So you have to just kind of look at it. But I still think there's excellent correlation, and it gives you excellent insight into what is really going on in the market. Instead of just looking at the euro dollar, which also obviously has influence from the euro. It's not just the U.S. dollar that's driving the action on this. And you look at the stock index future, which, is driven very heavily by the overall economic outlook and what the dollar is doing. That's why there's such correlation between them. I think you do need to look at it, and it's whether you trade both assets or not. Okay. So these are still day trading strategy, guys, whether you want to call them scalping or day trading. I don't know if they're really scalping strategies. I think of scalping where you're literally in and out in a few minutes. I'm talking about holding these trades for, at least a couple of hours, if not longer, depending if you catch one of those trending days where it just trends all day. But even if you're looking just to exit and then maybe get a trade in the opposite direction, like on this day, right, up and then down, you're still going to be in these for at least a couple hours each, okay? So they're not really scalping strategies, but they're definitely day trading. So the bottom line is, guys, no trades before 9:30 a.m., which is the U.S. Open for the futures, and an hour and a half into the U.S. Forex session. No trades before that. Beginning around that 9:30 spot, you might want to start looking for some of those trades, and at least start comparing what's going on those particular days, and see if you can come up with anything, and see if it's worth trading. Okay, so so that's it, guys. I am gonna leave it there, and I hope you guys have a great weekend. If you have any questions or comments on this, please leave it in the comment section. Smash that like button. I'd really be interested if any of you are looking at this, or if you're just looking at this saying, I don't know what this guy is talking about, because it is a different way of looking at it, and markets are correlated. There are most definitely correlations in markets across different assets. So you can't just necessarily look at futures in a vacuum, or look at Forex in a vacuum. There's most definitely correlation between them, especially when there's a currency in the futures pair, in the Forex pair, that has an influence on the other asset. In this case, the U.S. stock market and the U.S. dollar are going to be heavily correlated to each other. And they are going to, at times, deviate, like I showed you. But it is a really good thing to look at it and just see if you can make any inferences as the market opens for the day at 9:30. And it can really help you kind of set a direction for what you're going to do out of the gate, if you're going to do anything, or if you're not going to do anything at all, or if you're just going to pick one over the other to trade, if you look at both. All right? So I hope that helps, guys, and we'll keep you updated on these things. I'm still backtesting this strategy. I really just started, I'm backtesting and forward testing, quite frankly. I started really trading it this week. I backtested it for a while before that. and I'm actively trading it this week in small positions. I can tell you for this week, I did really well on the future side using this, and about, honestly, probably around break even on the Forex side. So I still had a really good week, but it was just better on this side. And I'm not sure whether that was just, that's the way it is, and next week it might be reversed, or whether it's going to come down to the fact that maybe this isn't a really excellent viable strategy on Forex. Maybe it's a better thing to trade futures this way and not Forex. One thing I will say is, Forex can tend to have much more wild swings and price manipulation. Not that you don't have it in futures, but if there's no news event driving the futures market, it tends to be a little bit smoother. You are going to get, big revert, against the trend corrections like this. But, most of the time, your Forex is going to be a lot more wild. You can see even this today. So here's the futures, right? I'm sorry I'm delaying this video, but he had this move up. It came down. This was a nice correction, okay? But it didn't come down so low that, if you were in this trade from down here and you had a stop, you didn't get stopped out. I mean, you had some big drawdown. You were probably like, oh boy, this thing is going to go against me, only to have it shoot back up. This is a classic, liquidity and stop run grab. But if you had your stop properly placed, you wouldn't have gotten stopped out, and you still would have had a nice day. But look at the Forex pair. This thing went up, okay? It came all the way back down, just below these lows right here. Okay, it's about 3 or 4 pips below the low. Well, why do you think that is? Okay, it's the large banks, institutions know their stops on it. They needed some more liquidity. They came down, took these out, and then they went back up again. Okay. Now, it was a Friday, so the market just kind of died out, really didn't do anything in the afternoon. I think if this was the middle of the week, we would have seen this just keep going up. But it is Friday. I think people just exited at this point. But it was just enough where they slammed it down, took out the stops, and then ran it up. And not that you don't get that sometimes in futures, but they tend to be a little bit more controlled pullbacks. So like I said, on this short time frame, maybe I'll find that this strategy is not great, but I'm not certainly nowhere near saying that right now. I just got to continue to fine tune it and forward test and back test it. And I still had a really good week even with that, because I did really well on this side. So, all right. So anyways, guys, I will leave it there. Have yourself a great weekend. We'll be back next week. And again, if you have any questions, comments, leave them down below, and we'll talk to everybody soon.